What's going on, guys? Welcome to my technical analysis masterclass. Hopefully this video helps you make a ton of cash. As always, this is not financial advice. I'm not a financial advisor, so please do not make investments based on what I say in these videos. All right, so technical analysis is one of my favorite things to do. Very passionate about it. I think it gives me an edge in the market, and I'm quickly realizing there are a large number of folks that don't know how to do technical analysis, specifically within the cryptocurrency world. So hopefully this helps you guys out. TA is not meant to be perfect. You're not going to be able to predict the future 10 times out of 10 times. You just won't. There's going to be times you're going to be so wrong. It's going to befuddle you, but it's only meant to give you an edge over traders that don't know how to recognize patterns, don't know how to use indicators, don't know how to read volume, so on and so forth. Okay, so it just gives you an edge. It puts probability in your favor. Now, there's other things you have to be disciplined in, right? You have to know what your risk profile is, aka how much money you're willing to risk for a certain trade. You have to know what your risk to reward is. You have to know your stop loss and your take profit before you enter a trade. You have to have solid risk management, and you have to stay level-headed. Like, if you're getting super nervous or worried about a trade, it means you're over leveraged. It means you put in too much money. It's either that or you don't have conviction in the trade. And in either case, you shouldn't be in that trade. So that's the only time you should really be like freaking out or nervous. Other than that, if you're being disciplined with how much you're allowing yourself to risk, and it's a solid risk to reward, there's really no reason to worry. All right. And then also, if you have TA on your side, you should feel more confident, because at the end of the day, when you're winning on a trade, someone else is losing. It's a zero-sum game. All right. This game is cutthroat, and you'll learn that very quickly if you start trading with real money. Paper trading is nice. I don't really know if they have that in the crypto world. They probably do. See, I come from trading stocks and options. I just started trading crypto maybe 3 or 4 months ago, I think like October, but it's all the same thing. Anything with a chart and price action, you can do TA on. All right, and I'm going to show you guys that with Ponky here. This is one of my favorite cryptocurrencies. I think it's going to have a really, really bright future. It's already up quite a bit, sitting at $31 million market cap. So real quickly, perspective is a big thing. All right, so if you're holding a token long term for like weeks or months, you don't really need to be looking at these lower time frames, because if you look at, let's just say the 15-minute, all right, look how up and down this is. It's all over the place. So that might spook you if you're super zoomed in on the lower time frames, but if you're holding for days or weeks, you don't need to see all that volatility, because at the end of the day, when you zoom out on the daily, what is it actually? It's just a rocket ship. It just goes straight up when you look at it like that. So it's up like 640% from its local low at like $8 million market cap. So just keep in mind, like, if you're not getting in and out within minutes, you don't need to look at the 1, 3, 5 minute time frame. Those are good when you're making your entry and when you're making your exit. Other than that, the lower time frames are they're just kind of unnecessary, and they'll kind of shake you out of your position. All right, so let's get started here. I'm going to cover as much as I can. This is for anybody. So if you're a complete beginner, if you know nothing about technical analysis, this should help you a ton. And make sure to rewatch it, because you're not going to get everything the first time through. This stuff took me years, and I had multiple mentors that are like real pros, and they taught me the ropes, they taught me the game, and I'm forever indebted to them. All right, so check this out. We're going to start with the candlesticks. So that's what these things are called. You got green ones with positive price action, red ones with negative price action, and the anatomy of the candle is such. So the bottom of a green candle, the bottom of the bar, is the start of the price action, all right? That's where the candle opened at. The top of the candle bar is where the price closed at within that day. Each candle represents 24 hours of price action on this chart, okay? Now, if you look at the red one right after that, on a red candle, the open of the price action is the top of the bar right here. So I'll mark it, it's like 0.074 around there. And remember, nothing is perfect in TA. So like, if you put a support level, and we'll get to that later, levels are huge. If you can identify levels, that's huge. But so like if your level is like 0.074, say that's your top side resistance, it could go a little bit above that, it could go a little bit below that. So like think of things in zones as opposed to just one strict line. All right, but in any case, on a red candle, the open is the top of the bar. The close of that candle is the bottom of the bar. That's where price action closed at. And then the wicks show you the highs and the lows. All right, so this is the low of that time frame. And this wick to the top side is the high during that time frame. All right, so that's how you read a candlestick. Very, very simple. Again, you might want to rewatch this video multiple times because I'm going to be covering a lot of stuff. And hopefully this will help you guys out a lot. All right, so in this case, we're going to zoom in on the 1 hour, and we're going to dissect the first day of trading on Ponki, which was historical, to say the least. So it's the first meme coin, to my knowledge, on Solana, maybe meme coin ever, that did $40 million market cap, day one, 10,000 holders. So this is the 1 hour chart. And I was fortunate enough to buy day one. It was really exciting. So check this out. First, before we get started, I'm going to show you what an uptrend is. All right. So this is an uptrend. This is like a perfect example of it right here. You got higher high, higher low, higher high, higher low, higher high, and then higher low, but it failed to make a higher high. All right. So let's start with trends. There are 3 types of trends. You have an uptrend, you have a downtrend, and then you have consolidation. All right, so this is an uptrend right here. It's super easy to identify. You have a higher high, higher low, higher high, higher low, higher high. That's just an uptrend. It's a series of higher highs, which is right here, higher high, higher low, higher high above that previous higher high, and then higher low above that previous higher low, higher high. All right, it's simple as that. It's just a staircase up. All right, and look what it's doing right here. Higher highs right there, right there. Higher low, higher high, higher low, higher high, higher low, but then it failed to make a higher high above this level right here at 0.08, okay? It failed to go higher than that. So what does that mean? The uptrend is over. And always remember, the trend is your friend. Don't trade against the trend unless you see a reversal pattern, and we'll get to that later. But the trend is your friend. So if it's an uptrend, it's an uptrend until it's not. Until you see a reason to believe that it's not, it is an uptrend. All right, that is an uptrend right there. A downtrend is simply the opposite. We'll probably see one pretty soon. Yeah, cool. So this is a downtrend, super simple. All right, you got lower low, lower low, lower high, lower low, lower high. We got a lower low, lower high, and then it failed to make a lower low below that at 0.01, all right, at 1 penny. That's a key level right there. Why? Because it's a round number. It's easy on the eyes. Traders are psychological, so you'll often see price stop at round numbers like 1, 2, 3, 4, 5, as opposed to 0.173456. It's just not easy on the eyes. So typically you'll see price bounce off of round numbers like that. Numbers that are easy to read, basically. So that's a downtrend. It's simply the opposite of an uptrend. And just to visualize it, I remember this one trader, I forget his name, he simply drew this staircase and like everything clicked for me after that. I know it sounds silly, but like just memorize this. All right, so lower low, lower high, lower low, lower high, lower low. It's just a series of lower lows, lower highs, lower lows, lower highs, lower lows. And same thing with an uptrend. If it's in a downtrend, if the market is bearish, then it's in a downtrend until it's no longer in a downtrend. It's as simple as that. All right. So this one, for instance, so first off, we have this right here. This section right here is the uptrend. All right. So we'll put that in green. It's really helpful when you can just recognize sections. All right. So that's an uptrend right there. This is just consolidation. It's not really going up. It's not really going down. All right. So the market was deciding where it wanted to go. That's why I like charts because, and that's why I like trading, because the people decide the value of it, right? It's like completely democratic, and whatever the people decide is what's going to show up on the chart. So the chart is simply a graphical representation of traders' sentiment on a certain commodity or asset. That's all it is. All right. So the downtrend began right here when it started making lower lows and lower highs. So we'll put that in red. All right. So those are the three stages of a chart. You have an uptrend, consolidation, and then a downtrend. And you can see that on all levels of time frame. So we're looking at the 1 hour. You know, Ponke's only been out for, I don't know, a little over 3 weeks or something. So we don't have that much historical price action, but it's enough to show you a ton of patterns on here. Like the more historical price action you have, like if Ponke had been around for years, then the stronger the support and resistance levels would be. All right, so we covered uptrend, we covered downtrend, we covered the anatomy of a candlestick. Now we're gonna get into levels, all right? This is probably the most important thing, and it's so simple, all right? So we're gonna turn on the 4 hour right here. It's so simple, and Ponke is playing out textbook patterns, all right? So when you pull up a chart and you're trying to mark levels, like just mark the level as soon as you see it. You don't have to think a lot, right? If you're thinking a lot about marking a support and resistance level, it's probably not the right one. It's probably not a strong support and resistance level. Now, a support level is where price comes down and it bounces upward off of it. A resistance level is the opposite. It's when price is in an uptrend and it gets denied, it gets rejected back down, all right, to the next local support level. All right, so just pulling up this chart, I know the first day was just a straight rocket ship up. So there's not much levels we can mark like the first 24 hours, but after that, it shows us some decent levels. So right here, that's a level. I'm gonna tell you why I'm marking it too later. All right, so that's another level. You see how I'm not even thinking about it like at all. That's another level. I'll tell you why I'm doing it, but like in the moment, it's just, it just jumps out at you. It's another level. It's another level. Let's see if there's any recently. So these are horizontal support and resistance levels. That's a key level right there. And then all-time high is at 11 cents. So might as well make that a level. Although I'm not sure it's gonna be that strong of resistance, to be honest. And then we'll break it down to the 1 hour to see if we can see anything in between. So this was in a rising channel. Yeah, right there. All right, cool. So we have a lot to work with. You see how like I wasn't even thinking about it really. You know, it's just like you're looking for where price goes up, gets rejected multiple times on the chart. So it's gonna jump out at you. You don't have to search for support and resistance levels. They're just gonna speak to you, especially the more that you do it. And this is just like anything else, playing guitar, shooting hoops, playing football, baseball, basketball, tennis. The more hours you put in, the better you're gonna be at it. It's as simple as that. So you can watch a million of these videos and take notes until the cows come home, but until you actually do it and implement it, you're not gonna truly learn, all right? So we'll go back and I'll tell you why I marked these levels, and also like, what does that mean? Like, what is a level, Jackson? You know, like what does that mean to somebody like me? I'm just trying to make money. What does that mean? All right, well, it shows you in the future where price is likely to bounce or get rejected from. So if you're long at like, say you bought Ponky like right here, like 0.017 or 0.018, because you thought it was gonna break out of this channel right here. It was in this channel for a long time. Because you thought it was gonna break out of there. You buy in at like 0.017. Well, it'd be nice to know your next resistance level is right here, 0.022. And what do you know? Price got jammed up right there. There was a lot of friction. So if you're swinging that, you could have sold. But that's only if you knew. And how did you know that? Well, it's because price came up to this level at 0.022 multiple times and got rejected. Let me highlight it. All right. So first off, the first thing I saw was this wick right here. It came down. Hopefully you guys can see this. And it touched right there. A little too far. Whoops. So this wick right here, it came down and just touched this level at 0.022. Now where else? It came up. Price came up to this level right here, December 23rd at noon. Bounced off, got rejected. Came up again, rejected. Came up again right here, rejected. So it's where is price bouncing off of multiple times, not just once. You want at least 3 touches if you're making a trend line, but the more the merrier. So right here it got rejected big time. That was a key moment in price action history. And then it broke through. So you see it broke through. It broke through that 0.022 and it came back down, retested support, which was at the top of this channel. I didn't mark this one, but there's clear support right here. And why is there clear support? Well, it touched once, twice, 3 times, 4 times, 5 times. That's clear resistance. All right, it's resistance when the price is below that level. When the price goes above it, now it's support. All right, so price came above this level at 0.022. Bam, broke through resistance. All right, this was resistance. Now what happens? Old resistance becomes new support. So price came down to do a retest and continued upward. You want to see a retest. It's healthy. You don't want to see price just blast through all, well, I mean, you'd like it, but almost always you're gonna have people taking profit. That's just normal. And that's why you see staircasing up, and that's what creates the higher highs and higher lows, AKA the uptrend. All right, so you're gonna see when price action breaks through, and look, you see the volume increasing right here. You always want to have coinciding volume with your breakouts. So look at that volume jump right here. All right, 672,000 on that one compared to 123,000. All right, now I think this is just one liquidity pool, but in any case, big jump in volume. So you always want to see volume on breakouts. If you don't have big volume on a breakout, it's likely to just come back down to its previous level. All right, so breakout, retest, continuation. It broke through the next level at 0.03318, but you see that it did have trouble right here. It came up, got rejected, came up, got rejected, came up, got rejected, bam, broke through on the 4th try. All right, so when you're aware of these levels, you can kind of understand what might happen next. So those are your support and resistance levels. If you can just master that, just practice with a chart. Just look in the past where prices got rejected from, where prices bounced off of, and then go forward in time on the chart and see if it happens again, see if you're right. You can get pretty good at this rather quickly. And if you know levels, you're already so much further ahead than the rest of the game. Obviously narrative and, you know, like funny memes and cult communities are good, and breaking news is awesome. But again, all those things are going to be graphically represented on the chart. So no matter what happens, like, you can still mark up any chart. I don't care if Elon Musk sends out a tweet, punky to the moon, and it goes up, I don't know, 100x or whatever. That's still going to be TA. You can still study that because eventually it's going to hit a top. And what is that? That's your new resistance level. And then you're going to have a big sell-off down to the next level of support. So price action is dictated by one of three things. I probably should have said this earlier, but I'm just winging this whole thing. So it's dictated by technicals, fundamentals, and breaking news. And that's for stocks, crypto, that's for any commodity with a chart attached to it. Okay, so remember that. Price action is dictated by technicals, fundamentals, and breaking news. All right, so those are levels right there. You guys can see the volume bars at the bottom. Now I'm gonna go over this section because this was really interesting, okay? You had a 154% push up between January 3rd at noon, January 3rd at 8 a.m., excuse me, and January 4th at noon. You had like 150% jump, all right? The volume was decent. It wasn't anything like insane. And that's what I'm talking about. There wasn't extreme volume. And guess what? Price came right back down to that same level. But this is what I want to talk about. So that's what you had. See, now look at this. This is the top side resistance of this channel. This rising channel is rising just slightly. And guess what happened? Price later down the road, look at that. Look at this price. Came down, retested it. That's a retest later. So then the bottom side, or the support, is down here. Bam. All right, so price was in this channel. If you wanted to, you could have swung trade that thing like all day, man. 40, 50% gains. It was so predictable. Look at that. Went up, got rejected. Went down, found support. Went up, got rejected. Went down, found support. Went up, got rejected. Went down, found support. Went up, broke through. Would you look at that? Volume increase. On volume. Look at that. Look at that big volume right there. With the breakout, coinciding with the breakout. Good confirmation right there. So it was in that rising channel, finally broke out on volume, got stopped out a little bit at 0.022. Look at that, came down for the retest right here at 0.0189 and then continued upward and created an uptrend because this is just consolidation. It was basically flat. All right, so you just see where price is bouncing off of, and then you create channels around that. All right, so you have another channel right here, like bam, bam. Now that's a falling wedge. So a falling wedge, falling wedge is typically a reversal pattern after a downtrend. All right, so there's a lot of these patterns, but cool. So downtrend, and then that wedge is falling, but it's narrowing at the same time. If it breaks above that resistance, which in this case is, this one actually got wider, but in any case, it's a rising wedge. You have resistance right here that it broke through. Bam, and look at that, on volume. Again, increased volume coinciding with the price breakout out of that rising wedge. Bullish. It's after a downtrend, falling wedge, excuse me. Sorry if I said rising wedge. It's a falling wedge, obviously. Price is going down and then breaks out on coinciding volume. All right, so you can find these channels the price is trading in everywhere you look. This is the 4-hour chart, okay? Now right here, we'll go more recently. Now more or less, that's the, I'm gonna delete these. That's the channel that price was trading in. Support, resistance, support, and then it broke through. And it got rejected at 0.053 right here. And again, it came up and price got rejected at, what do you know? Same level, got rejected. The wick touched it both times. Now, third time, price came up, got rejected, came back down, and then it broke out. What do you know? On increasing volume, all right? So if you just follow the volume and breakouts from channels that price is in, you can make a ton of cash. Now remember, trading is incredibly difficult and 90% of traders lose money over time. But if you learn this and you practice and you trade with real money and you learn to be composed, as long as your thesis is intact and you have conviction on a trade, then you're straight. But you gotta learn to cut losses, all right? That's like the main thing, because wins will add up. When you compound wins, you can make a big portfolio. But if you're just like spraying and praying and hoping that it's gonna reverse and hoping and praying doesn't work in trading. You gotta know like where you're gonna cut it and where you're gonna take a profit before you get in. And your risk to reward better be solid. So if you're risking $50, your reward should be at least 100, like a 2-to-1 minimum, you know? So yeah, you had this uptrend, and then this was pretty interesting because I was making updates on my YouTube channel. So at first you had a bullish, let me see this puppy. This is the 1-hour chart. So at first it was like this. Bam. All right, so this is pretty cool right here. Oh, real quickly before we get to that, there was this smaller bull. Let's see, what was it? I think it was right there. All right, cool. So you had this bull pennant, and I posted this while it was happening. You have this flagpole. Like that. So this is how you measure a flag, a bull pennant breakout. All right, so the flagpole is just the increase in price. You go from the bottom of the flagpole, which would be right here, 0.043, and then you go to the breakout point, which is where these two, the resistance and the support meet. So 0.056. So 0.056 minus 0.043 gives you the height for the next move up, all right? So that's 13. So you would add 13 to 5.6, which gives you 6.9. So that should be where the price went to and got stopped at, all right? So what did I say, 6.9? Yeah, not too bad, pretty close. That's where the price went to and got rejected. Look at this level right here. It eventually broke through it, but it hit it right here, got stopped out, rejected, hit it right here, got stopped out, broke through, came down, retested with this candle right here, right at, what did I say, 6.9. What is that? That's 7 flat. But like I said earlier in the video, nothing's perfect. It's always a zone. And 7 is a round number. It's easy on the eyes. It's psychological. But pretty close, 6.9, 7, not too far off. So that's how you measure a bull pennant breakout, all right? Same thing applies for a bull flag. You take the distance, the height of the flagpole, you go to the breakout point, which is where the resistance and the support meet. And then you take that height, you add it from the breakout point upward, and that's your next price target. And that's just like for short-term moves. Now, if you're thinking like long-term, it doesn't really apply that much. All right, so there's so much we could go over. I'm already like half an hour in. I'll probably make some more videos, but this will be good for now. We covered the anatomy of a candlestick. We covered levels. We covered channels, we covered breakouts. Remember, you want to see breakouts on volume. Again, if you can identify where price has bounced off of or been rejected from multiple times in the past, you have a good idea of what's going to happen in the future. All right. So let's go recently. I want to show some more price action before I end this thing, actually. I think we didn't get to this yet. All right, so this was interesting. It was a rising wedge. And people are like, TA doesn't work. Well, I'm gonna show you. Then if TA doesn't work, then why did price stop there once, twice, 3 times, 4 times, 5 times at that same exact angle over the span of like 2 days? And then the bottom side, you have the same thing. Look at this. Yeah, you had one slight false breakout on the wick, but once, twice, 3 times, 4 times, 5 times. All right. Things become pretty predictable over time when you start doing it enough. So you had this push up, it got rejected at 1 cent. Remember, round numbers, 1 cent is like a key psychological level. And then 10 cents, 10 cents. Ponky is flying quicker than I thought. Because when investors see like, oh, Ponky made it to 10 cents, it's like, well, what's next? Like, could it go to $1? Or could it go to 25 cents or 50 cents? So those are the next key resistance levels going forward. And 10 cents to 25 cents is only a 2.5x. To 50 cents is a 5x. To $1, it's only a 10x. So it's round numbers, all right? Because traders are psychological. So it was in this rising wedge, and then it broke down. Now, a rising wedge is not really bullish or bearish. It depends on what the breakout is afterward. So you got a good push up. That was a 140% move. You had a good push up, and then you just have price ping-ponging in that rising wedge. So hit resistance, came back down to retest support, went back up, resistance, got rejected, support down here, did another reversal pattern. We'll do reversal patterns, and then we'll wrap this one up. Came back down for support, hit resistance, came back down for support, and then it broke through this level of support. Look, price broke through, all right? And it continued, or it established a new downtrend, which price is currently in as I'm speaking. So you have lower low, lower high, lower low, lower high, currently making a lower low. So I'll probably retest this level. Let me know if it does or not. We'll probably retest this level at 0.065 right here. And then if it goes further down, it'll get rejected off of 0.065 and go down further. All right, so it's just levels, watching breakouts on volume, understanding reversal candlesticks, singular candlestick reversals, and reversal patterns, all right? So one of the most common patterns for a reversal, so say price is going down, and then it comes down to here, comes up, comes back down to that same first level, and then it bounces again. This is called a double bottom. It's a very common pattern. You're gonna hear everybody talk about it. And it's only reliable if you have that price come down. Let's say this is like 2 cents. Forget this for a second. Let's just say this is 2 cents. And we'll say this area right here, this is called the neckline. So price comes down to support. This is support right here. Comes up to the neckline, gets rejected, comes back down for a second time. That's the double in the double bottom. Comes up to the neckline, and then a perfect double bottom will go through that, break through, and then retest. So old resistance becomes new support. It'll retest and then continue upward in an uptrend. So that's a double bottom, all right? Now confirmation is when it breaks through and then it retests. If it breaks through and then fails that retest and just continues down, it's still in a downtrend. So the trend has not changed. So this is when a downtrend becomes an uptrend, all right? So the reversal pattern is the reversal pattern is the transitional period between a downtrend and an uptrend. And the opposite is true. A reversal pattern could be if price is going up, and we'll do one of those right now. It could be if price is going up and then reverses to the downside. So let's say price is going up. It could be a double top, so we'll start with that. It could go up to, let's just say this is 4 cents. Local high, price goes up to 4 cents, gets rejected, comes to the neckline, that's what we call that. Let's call this 3 cents right here. So up to 4 cents, down to 3 cents, bounces up to retest that resistance level, see if it can break through. It doesn't break through. It comes back down on the neckline, breaks through the neckline, likely to come up and retest, then continue down. That's a double top. The confirmation point is right here when it gets rejected. If it bounces through that neckline, comes back up into this zone right here, trading in that zone, well, that's just called a false breakout, all right? So patterns don't work 100% of the time. So don't jump the gun. You got to wait for confirmation. So you gotta wait for the trend to change, because remember, the trend is your friend. All right, so that is a double top. Let's continue with another uptrend to downtrend reversal pattern. So this is one of the best patterns, one of the most reliable patterns. More recently, I've been learning from this guy, Thomas Bulkowski. He wrote books on technical analysis. He has a website on it. The guy is a wizard with it, all right? So check this out. You have price going up, falls down a little bit, goes up higher, comes down to that neckline, goes up to that first push up, comes down to the neckline, all right? So this is what you call a head and shoulders. Now, it's gonna break through, retest, continue downward. That's called a head and shoulders pattern. And I'll identify a couple of these. We'll go back and I'll show you some of them in action. So this is a head and shoulders. Why? Because it looks like a dude with a head and shoulders. So left side is the left shoulder, middle section is the head, right is the right side is the right shoulder, and then you have the neckline. So let's say this is $4 or 4 cents, I guess. And then this is, let's say the neckline is 3 cents. You have price push up, retest the neckline, go up even higher, retest, comes to this same level. So the shoulders are always the same level, all right? And then it breaks through, retests that old support, which is now new resistance, and continues downward. And guess what? You also have the opposite is true, okay? So if you don't know, on TradingView, you can right click this side and you can invert the scale if you want to flip things upside down. So if you're in a downtrend, price comes down to this left shoulder, comes up to retest that new resistance, and then comes down, makes the head, which is a lower low than this, and then comes up, but it doesn't make a lower low than the head, all right? That would just be a downtrend, that would be a continuation pattern. But it goes to that same level of the first shoulder, the left shoulder right there. So this is called an inverse head and shoulders. And then what does price do? It comes up, breaks through that old resistance, becomes new support, retests, and continues up. All right, so those are common patterns that you will see. Let's do a couple more. So price is coming down. It's doing lower low, lower high, lower low, lower high. Sometimes you'll see price just round itself out, and that's called a rounded bottom. You're likely to see the volume. So volume is pretty high, and then it gets lower and lower in the bowl. Once you get to the apex of the bowl, it gets lower, and then volume increases as you're exiting out of it, and price will reversal. Now your neckline would be right here, where the recent lower low was. So you wait for confirmation of a price to break through that neckline, which is marked by that lower low, and then it bounces off of the new support and continues upward. So that's just a rounding bottom. You can have a rounding top as well, which would just be the opposite. You're in an uptrend, and then the price rounds out, like a rounded top, and comes back down. Let's see, what else could we do? We could do, well, there's triple bottom and there's triple top. They don't happen very often, but you can sometimes have something like that. Or if it's the opposite, up, 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 gets rejected. So those are reversal patterns. You can also have singular candlesticks that will signify what's gonna happen. So that one's pretty good right there. Let's do the 30-minute. So that double top didn't actually reverse. That was a failed double top. All right, this little section is pretty good. So candlestick reading. So check this out. When you have a long wick at the top side after an uptrend, that shows that the bears are winning, the bears are in control. That's selling pressure. So right here, you see these long wicks at the top. All right, that's selling pressure. The price wants to go down. All right, and what happened? The price went down. It wasn't a huge drop, but price went up, wicked down, found support, and then continued upward. All right. And these are, well, you have an inverted bullish hammer right here. So that's when you have a long wick at the top, little small bar at the bottom, and that's after a downtrend. So downtrend, and then you have the inverted bullish hammer, and then it continues up. So those wicks were indicating, hey, people are selling here. Price is probably going to slow down and it's going to reverse for a bit. Now it did it big time right here. Look at these wicks. Price went up, bam, got wicked down. Look how big this wick is. That's huge selling pressure. That tells you probably going to have a drop in the future. And what happened? Price went down. All right. And then look at this wick at the bottom. See, this wick right here was showing you have a downtrend. And then this is called a doji, all right? A D-O-J-I candle, a doji. And then you have a solid green one after, very bullish reversal pattern comprised of two candlesticks, all right? So you have a downtrend, doji, small bar, long wick at the top, long wick at the bottom. That shows indecision. The bulls nor the bears won that, all right? And then you have a solid green candle bar after that, uptrend. And what does it do? It comes up to this level of resistance, but it just wicked it. Strong wick at the top, tiny body at the bottom. So that's a bearish hammer candlestick. It's indicative of a reversal. And what did price do? It went down. All right, it went down like 40% off of that. Let me find a couple more examples of candlesticks. Oh, here we go. This will be good. So bullish engulfing right here, this candlestick right here. So first off, you have a downtrend, right? Dropped like 40%. Price dropped 30% from that area. 30% downtrend. And then you have this candle right here, solid green body that completely engulfs the previous red candle. That's called a bullish engulfing. Now, this typically only works on the higher time frames. I'm on the 4-hour right now, so that would be suitable. But this is a bullish engulfing that's indicative of a reversal. What happened? Price went down, reversed up, and made it so it went 30% down and then 70% up. All right, and you got a bullish engulfing right here, but it's also called a 3 white soldiers pattern. You have 3 solidly green candle bars right after a downtrend. That's a signal that the uptrend is about to begin. And what happened? You had higher high, higher low, higher high. Let's see how high this goes. Higher high, and then you had consolidation. All right. So that is how much I want to put into this video today. Hopefully you guys learned something. I know it was a lot, but I will hopefully make more videos. I can go on and on about this. If you guys have any requests, you can hit my email in the link in the description below. And I hope you learned a lot. Just rewatch this video, just study charts. If you put the time in, you will be successful. Believe that you can be successful. Believe that you deserve that money. Have a goal. Say, hey, I want to make $100,000 this year. I want to make $1 million this year. I want to make $10 million this year. And no goal is too high. All right. Don't let anybody persuade you to lower your sights of your goals. All right. So whatever you believe, you can do. But you just got to take action. All right. Take action all day long. You're going to become incredible, and then it's going to become second nature to the point where you're not even thinking. It's just like patterns just jump out at you. So I want to talk more about reversal candlestick patterns, also continuation patterns. But continuation patterns in the grand scheme of things are really just part of the uptrend of the higher highs and higher lows. So it's more, it's easier to profit from a reversal pattern than a continuation pattern. All right, so I want to talk about more on reversal candlestick patterns, and then also like individual candlesticks as well. Let me just find, I love this stuff, man. Let me just find a bearish engulfing, which will be the opposite of what I just showed you. There was one right there. Let's see day one. Let's look on the 1 hour. All right, cool. So this candle right here is called a bearish engulfing. So it's the opposite of the bullish engulfing right here. It's a big red solid candle that swallows the previous green candle. Now this is after an uptrend, all right? So you had price go up a good 30, 40%, and then you have this red big candle engulfing the previous green one. And what happened? The price reversed to the downside until it was met with a bullish engulfing, all right? And how big was that move? That move was 35%, all right? So that's an example of that. Love you guys so much. Thanks for tuning in. Hopefully this helped you out. I'll see you for the next one. Peace.